Start recording and let's get cracking. It's been 2 weeks. Let's have a look here. Right. Yeah, so it's been 2 weeks since our last live, and in our last live we had graded the swing from the lows to what could potentially be the target at 38k, or what we were looking at. But the hurdle obviously is, of course, here at this weekly order block, and we'll get a bit deeper into it. What I'm trying to see here on the overall look, or the overall chart, is I mentioned we tapped the 75, or what I'd like to see is tap the 75% and then drop lower, since we had speed through the 50%. So speed through the 50 would give us stop runs at the 75%. So if we can do a stop run here down to 25k, retest this level around here and this old high, if we manage to hold that high, then the possibility of heading even higher to 38k is likely. So that would give us almost a failure swing here, and then we head up here like this, and then potentially put in a top, right? But if we start breaking down aggressively through all of these levels, then this stuff is cooked. And what we'd have to then look at is a bearish dealing range being formed, especially if we start to break down here, take down this sell side liquidity after we've taken this buy side here, would give us a bearish dealing range from about here to here. We'd look at some sort of retracement to this level here, and then further downside, right? So what happens here, and if we get down to 25k, and especially whether it holds or not, so it's going to be a big deal. Let's look at where we are. Let me drop on another chart quickly, and then we'll run through it.
Hi.
Hello, my friend. Hello. Al dente, yep, I thought as much. Okay.
Yes, that was me.
Right, so here's a little, well, you can call it live commentary on what happened last week. This chart was posted up. And we'll go down to the lower time frames and have a look at what's going on there. Now, at this point, we already had the H4 market structure shift somewhere in here, right? And when we look here, we had the low, the range low, which we're calling this guy here. And then we had the high in here, and then we're going to talk about that high on a weekly level just now. And failure to go above this high here, failure to close above this high, would mean we target the extreme end or opposite end of the range, or the start of the range, which would be this low, and that's been done, right? Now it's consolidating here, either to break down further, which is what I'm looking at, with an initial impulse at about 3.5 standard deviations of this order block here, right? So from here to here, the last up candle projected down, and these are the standard deviation levels. Now a lot of confusion happened. We'll switch down to the H4. A lot of confusion happened the other day when we started to pump higher here on this particular move here, and that solely happened because of OB validation before the market structure shift, right? So let's see where we can figure that one out here. OB validated. Not too sure which time frame I used. We'll try and figure it out now. Could have been a daily. Let's have a look here. Okay, I think it was a daily, right? On a daily time frame, market structure shift would have occurred once we broke through the opening or the low of this candle here, and the OB validation would have happened once we traded through this order block, right? Now you remember me drilling into you previously that once you get OB validation before a market structure shift, then the likelihood that the OB gets raided is very high, right? So we saw this push up to raid the order block, and then what happened afterward? It dumped, right? So OB validation before market structure shift, OB likely to be raided. That happened, and then we saw the dump. Now, with regards to FEGs, if you remember, if you are bullish, right, and you have bullish FEGs that form, the 50% of those FEGs or the consequent encroachment, you don't, on this particular time frame or the time frame that you are looking at, you do not want to see closes below the 50%. Now, there are times when price can close on this example on a daily. It can close below the 50%. But what you would want to see then is the very next candle pushing back up and closing back above. Failure to do that, and that's not a good sign for any bullish momentum, right? So now you can see we've closed below the daily FEG as well. We took the range low, the start of the range out, and price is now consolidating here. And I see a lot of guys on Twitter seem to be longing every single new low that's being made. Now let's drop down to 15-minute and have a look at a few things. And let's just look at the delivery going down here, because what I've been telling you is once we, we'll just switch to an H1, because I've been posting some blue lines or blue levels this past week. And that's merely a play on the 2022 ICT mentorship model, where once you start to break down below a level right here, and more importantly, once you start to close, we're looking for the candles that close. So let me just zoom in a bit more here. We're looking for the candles that close. It would be this candle. The very next candle is where my blue levels come from. So I take the top of that very next candle, draw it out in time. We've made it blue there. And then that candle actually serves as a draw on liquidity. So when we got this move up here, which failed to close above the previous high here, or range high, what do we do in those instances? Whether it's a daily, 1 hour, 15-minute, whatever, we're always targeting the opposite end of the range, right? So that's one. Next one came in. Once we start to close below the range, and the candle that closes below the range, if this was the range low here, this candle closed, that would have been the next candle. You see, we didn't get price coming back in there. Let's look at the next one. There's the range low. There's the candle that closed below the low. And then what do? We take the very next candle, draw it out in time. And you see that candle serves as a draw on liquidity. You could either go short there, or you wait for a change in the state of delivery, which means in this particular case, the candle that took the high, the low of that candle gets traded through. So that becomes CSD, right? Same story here. You'd get CSD on this candle, because this candle took the high here, closed above here, and then it got traded through here. So that's a change in the state of delivery again. So those are where the blue levels come from. Now I'm going to switch down to, or switch up to a daily one more time, and apply the same thing to the daily time frame. You can see we have one of these candles sitting all the way up here, which hasn't been tapped. The very next one that I have marked off is this candle here that closed below here. The very next candle, you can see it's this one. So on a daily time frame, you can see that we've now taken that liquidity on a daily time frame as the draw, right? That was today. Switch back down to H4. You can see it clearly there. It happened this morning, and you would have seen me post this in the group here, right? I think it was M5, M15, could have been M5, right? So what we were looking for here on M5, let's pretend none of this happened. We're looking for the candle that closed above this high here, right? It's this candle. And I told you, watch the low of that candle there, because that candle low being taken, which it was here, is CSD again, right? I'm not interested in any of these candles. I'm more specifically interested in the candle that took the high and closed above being traded through. And what did I tell you guys to do is target the failure swing low, which was this. And once that forms, what happens? You've taken buy side and now you've taken sell side. It gives you a bearish dealing range from here to here, right? And what we then looked at was, I think on M15, we're looking for, first of all, we're looking for, let's put this up, looking for your dealing range being formed at that particular time. Let's just put it a bit to the side. And any PD arrays in or around the 50%, which gave us this FEG here. But more specifically, what I had in mind was this purple line that you see here. Now this purple line specifically, and we'll get into it now, is merely because all of this delivery right up until, not even here, up to the purple line, right? Let's try and get it as accurate as possible and zoom in there. Right, so if we had the bearish dealing range from here to here, we know that if we're looking for shorts, it has to be at an FEG in and around the 50% or higher. And I'm looking at on M5, I'm looking for this range or this specific part of the range to become efficient, right? So on an M5, it would be, let's put on the magnet tool here, the low of this specific candle, because everything below this candle is all running on sell side, right? So when price comes back into this candle and closes above, makes this part of the range efficient, we're looking for CSD. And al dente, you would have remembered me telling you that it's a tight one, but let's use this candle's low as the CSD. You remember that?
Yes.
Yep. And then what happened up? And then we had an eye level here. So price came back into the eye level. Let me see if I can pop that up from a chart onto the screen. Yeah, here, right? Copy image, paste. Let's try and open it up a bit. There, right? There's your eye level here. There's the black line. You guys can see this. It's on the chart. There's the dealing range formed. There's a failure swing low being taken out. And that's all happening around this purple line. So once the candle that made the range efficient was this guy, because it closed above here, above the purple line closing, made the range efficient, and then the candle's low was taken. CSD, you go short there, or you risk the chance of pullback here with your stops above here. And then we took the low again, right? So now we're sitting in another bearish dealing range. Now this one's a bit trickier, right? Because what's happening here is you have a low that's being taken. The candle that took the low has been traded through, so that's CSD in itself. And price has pushed in above the 50%. And more specifically, what I'm watching is this FEG that we had in mind initially. That's sitting here, right? This FEG here on M15. It's now sort of becoming an inversion level where... Al dente, sorry, are you saying something?
Yes, sorry. But that FEG is got away already.
Yes.
It's not there anymore.
Right. So I've said this before, FEGs or any PD array, right? Whether it's an FEG, whether it's a breaker block, whether it's an order block, all of these can be reclaimed or inverted, right? Meaning, fair enough, it got rated here, right? Is that what you're saying? got raided. Then price came back through it. Agree?
Uh-huh.
And then what happened here?
Uh,
Can you see that? The FEG, although it was raided, it became reclaimed and served as resistance. So it became something called inversion,
uh-huh.
right? So it's reclaimed here, and that's what I'm looking for. But besides the FEG being an area of interest here, or the reclaimed FEG, let's take off the dealing range here. What I'm looking at is when we have a model like this, where you have your failure swing and then your liquidity run and then your push down, which you can see here, right? I'm interested in the range or the candle body from here to here specifically, right? And I'm interested in 50% of that for my entry model. So if we had to look at 50% of, let's see if I got it drawn. I already have it drawn in here, right? It's at this level here. You can see if you had entered at 27,545, stops above the high, you would now be at 27,282, right? Can you see that? So the FEG, reclaimed FEG, although price went above it, came back below, rejected off the FEG, rejected off the 50% of the OLR run, which was the run from here to here. So remember, at the time, this was the real high of this leg here. Then price pulled and then ran, giving us the liquidity run, and then it ran down. So it created a bearish dealing range from here, taking buy side, taking sell side, giving that the dealing range, and there's the pullback coming in now. So I'm not a fan of going against high time frame order flow, especially if the high time frame order flow is bearish. Then you would remember me also telling you previously that the setups may present itself, but they are most likely to fail, and it's not because the model or the entry model is messed up. It's just the fact that you're going against high time frame order flow, which is currently bearish. And if you had a setup like this, where a low's being taken, the candle that took the low gets traded through, which gives us CSD. But if you look here now, the candle that broke above here is also being traded through. So up candle lows are being traded through. So I don't have much, I don't have much hope in this setup right now to be bullish. But again, there's a lot of people bullish on this particular setup when the lows were swept here, and then they're obviously looking to elongate a bit higher. Because for me on the daily, the blue level has served its purpose. The blue level was the drawn liquidity, and then the draw has been achieved, right? I'll start to get more bearish maybe tomorrow, more bullish, sorry, or consider anything to retrace much higher if we then now take this candle's high. Because what do we have now? We have a situation where we've taken a low on this daily candle, right? And if the high of this candle is then taken by tomorrow's candle, then for me that would also be CSD. Then we'd look for retracements and then actually a push higher to this blue level here, and then we'll take it from there, right? Because remember, at this point around here, all the way down to here is all running on sell side delivery. So at some point, it doesn't have to be now, it could be later on, they are going to want to make this efficient up to here, right? So we can't rule that out.
So you don't think it's going a little bit lower?
Yeah, of course. That's what we're looking for. That's what I'm telling you now, is that I don't have faith right now in any bullish setups, because you can see people getting rinsed all day and all weekend on any and all bullish setups that have been presenting themselves. So what are we working on
That's
now?
not a problem. You draw a blue line below. Show me a little bit. Scroll down.
Yeah, I'll show you the blue line below now. Just give me 1 second, right?
Yes.
So we had our dealing range here, we had a pullback here, and then we broke down even lower, right? So I'm looking at the range from here to here, and the FEG being reclaimed here to push us even further down, because if you look at the structure now, it's low, lower high, lower low, lower high. Can you see that? So I'm not too bullish just yet, because this model for me right now, even though we've got some sort of CSD, this can easily tank, right? This is one of those models that catch a lot of people, especially because this happened, right? Took this low and this low and then got traded through. People will look here for retracement to do what? Go long. So that's something we have to watch, and the high of today's daily candle to see whether it gets taken tomorrow. Now, the blue line that you were talking about is the one below here, right? 26,652.
Yes, that's also my target.
Right. Now,
I think below that, a little bit below that, is very a lot of liquidity.
correct, right? So again, now this is a bullish case of the blue lines. We had a high being broken or closed above with this candle. Let's zoom in there. And this is all a play on the tweet that I put out today or earlier for the FEG model, right? So highs being broken, leaving FEGs behind. Those FEGs, if you are bullish, are long entries, right? But the moment you start getting opposing FEGs being traded through and closing below, it's very difficult to become bullish, because these should hold if you are bearish, right? At this point here, these were perfect entries, because here's your blue line showing up for work here. And the blue line is this daily candle closing above here. The very next candle, the low, is where the blue line is, right? Now, if you were bullish here, then what are you looking for? You're looking for a run on sell side or a PD array, bullish PD array. So this blue line is working as sell side. So what happens here? Blue line gets taken by this candle. This candle's high gets taken. What is that? CSD. More especially if we took the low and then we took a high, what is that? Dealing range, right? So all you would have had to have done is, even if you put a dealing range from the low to the high, take it out in time, you're looking for any either order block, rejection block, FEG, any of it you're looking for here, right? Below the 50% in order to go long again. So this blue line, I still have it here on here because the FEG itself has not completely been filled. I think this is the CE is the 50% of this particular FEG. You can see in terms of foot projections, initial impulse was here, that's done. First objective, 3.5 standard deviations of this order block here, this order block here being projected down 3.5 standard deviations would be the first objective. And then we're watching whether the consequent encroachment here actually holds up or we start to close below. Then finally we have our order block sitting here. And this order block, if you look at it, the order block here is a decent order block purely because it led to a sponsorship candle, al dente.
Did he just say sponsorship?
Yeah.
Yes, I got you.
Is that Jonathan? Did you ask me whether I just said sponsorship?
Oh, yeah, I didn't know that this was the microphone was on.
Ah, okay. So
But
you're
yeah,
talking to yourself. You can talk to me. It's fine.
yeah,
Are you confused about what sponsorship is?
yeah, yeah.
So sponsorship would be the long candles up or down, and basically sponsorship candles would mean they are institutional candles. Candles sponsored by institutions, big boys. The big boys behind the big candles. Okay, get it? Simple. So
Got it.
if you have an order block that led to a sponsorship candle, then this order block must mean something. So if it does mean something, then I'm marking it out. I'm watching price come into it, and then I'm watching price more especially respect the mean threshold of that order block, or the 50% of that order block. Right? On a daily level, we will allow it to wick through, probably hit our second objective or a little lower. What we don't want to see is closes below the mean threshold of this candle, because then what's happening is we are now starting to F up all of the bullish PD arrays on the way down. We already messed this guy up. If we get down to that order block, this guy's messed up. If we start to close below, this guy's messed up. Then what are we dealing with here? We're dealing with something more nasty that's most likely making its way down, or the objective is here. And once we start to take this level, we have a huge bearish dealing range from here all the way down here. Then you could entertain or look at the possibilities, even if it goes a bit lower, that you get a pullback here, right? So we take it a day at a time. My guys know that we've been looking for about 16.7 for quite a while, based on some other stuff. If I have to base it on normal stuff that I'm looking at right now, then I'd say that they would most likely have to print a down candle here, right? Print a down candle on a daily time frame here, because everything above this is all running on buy side or up candles. So at some point, to make this entire range efficient, it's been more or less efficient here. That made it efficient there. Price took off there. This leg down here needs a down candle body close here. So we're not out of the woods yet, because what that opens us up to are things such as this entire leg here being a failure swing, right? And then this coming in as a liquidity run down to, well, not 2K, let's get that out of the way. I think we had about 9 something, right? COVID lows. And then something like that. So if it has to happen that way, then that's what we would be looking for. Right, let's look at on a weekly time frame. I think I have it on another chart somewhere here. Let's go to the weekly. Now, you remember I said, and Al Dente was very upset with me when I said 29.2, which was there, right? 29.2, 29.5, and that was merely because that was the wick of the weekly candle, right? If I took the entire weekly candle from the bottom to the top, and I took 50% of that weekly candle, it puts us at 3764. Price here is about 31K, but you can see price hasn't closed above the 50% level of that weekly order block. Can you see that? Now, if, and I think I would have said that here, if they, well, not if, the need to want to, let's mark this level off here, right? We'll make him purple, make him a bit bigger. everything below that level ran on sell side or down candles. Can you see that? All down candles. So if they wanted to make the range efficient, what would they need to do, or what would they have to do? At some point, they would have had to have printed a weekly candle body in this range up to here to make it efficient. You agree? And I told you, once they do that and they take the low of that candle, it becomes a weekly change in the state of delivery. Right? I think the words I used, and Al Dente didn't get it, is cooked. It's cooked. So we're dealing with a weekly change in the state of delivery because the weekly candle, which was 2 weeks ago, that made the range efficient, has now been traded through, closed below, and we're dealing with this guy here now. And more or less what we are going to deal with here, if you start to look at this now, right? There's also a need to want to print a weekly candle in here. Why? Because everything above
To make
here,
it efficient.
everything above here is up candles, right? So we want them to come print a weekly candle here. They can mess around within the range. There's also a need to print a weekly candle, wells, all the way down here. Right? All the way down here. Which aligns with the daily down candle that we spoke about somewhere around here, 16.7. So I can see from the Elliott wave guy's perspective that this may be some sort of 5-wave move up and then looking for retracement. For now, the most important thing that I'm looking at is, can 25K hold, which puts us at this level printing a weekly down candle? And if so, do they want to do this next as a liquidity run to take any early shorters out here?
This is realistic.
It's realistic.
Yes, sounds for me realistic.
Right? So come down to 25K, puts us in line with our stop run at the 75%, and then a push higher to 38. What's happening at 38? 38 has the need to want to make the range efficient here. See that? Print a weekly up candle body there. So we're not interested whether it's going up or down. We are only interested in is from the weekly down to daily, where are we getting CSD? Now if we expect reversals, CSD, you need or don't need to know anything else besides where is the next possible CSD, or has the next possible CSD played out. Let's look at a monthly really quickly. If we look at the monthly candle, right, we have a balanced price range here. This monthly candle had a long wick down, which basically means price came down, went back up, and then the very next monthly candle did that, right? So what does that make? A range. And if that's a range, what are we interested in? 50%. Let's have a look at it. So it would make the wick of that range a BPR. And if that's a BPR, let's look at 50% of that. Here, right? Top of the monthly week to there. And if we go down, let's scroll in there a bit more. Puts us right there, 50%. See that? 50%. So a lot of confluence against the upside at the moment, and all we need to do is play the downside and just keep playing it. That's all we need to do. when the price action becomes cleaner, and when I say cleaner, at the moment we are in this order block here, right? This long H4 candle, and the 50% of that, you can see price is wicking through, not closing below. Can you see that? So this is the mean threshold of this H4 order block right here. No closes below. But what happens once we start closing below? If this was the range low here, and we start to get closing below, anywhere below this, below the range low here, well, we become more bearish. Now, unless, let's look at it this way. If you want to see a reversal, reversals only come from liquidity pools, right? Which would be old highs or old lows, in this case, old lows, or failure swings. So if we expect full-on reversal, or at least retracement to take us a bit higher, then we'd look here, al dente, at your blue line, or the failure swing low, right? Because one of the elements of a trade setup is reversals occur at seek liquidity pools. Now, if this was merely retracement to go higher, then retracement seeks imbalances. So if this was retracement, where are your imbalances? Huge imbalances down here and below it. So at the moment, let's just, lowest hanging fruit is down here. Blue level about 26.4, 26.5. And let's see what it wants to do after that. Now, someone spoke about this huge H4 FEG in here. Do they have to go back there?
I'm disappointed that it doesn't need to get doesn't need to get taken. So yeah.
Yeah, and I spoke to you about this earlier, purely because if you look at the delivery from here to here,
Yeah.
right, and then the delivery from here to here balances the range out. So if it's a balanced price range, these on lower time frames would become breakaway gaps, moving fast away from a level. Doesn't need to get there.
Okay.
Doesn't need to get there. I know we looked at it on an H1 the other day or something, and we wanted price to, I think, Sloth, you mentioned that we were somewhere here, and we wanted it to come to the CE of that.
Yes, then 29,500.
Yeah, right?
Yeah, I think the C is around 29.6, but yeah, in that area.
Now let's watch this. I'm going to take this guy out. Let's watch something and see whether this works out, right? We had delivery from here to here. You agree? And then we had delivery through that down candle closing here. So there's a specific portion of this delivery. Let's zoom in a bit more. So everyone can see this clearly. There's a specific portion of this delivery, and I just want to see which is the lowest candle. It's most likely this one, right? The need to want to print an up candle in that area there. See that? And what happens once they make the range efficient? This is where, and I've told you before, this is where speed comes from. Once they balance the range, aka they print an up candle where an up candle needed to be printed, and then they take the low of that up candle, CSD, speed. See? If you were ICT breaker block vibes, maybe we could have used that, use 50%, then CSD. But the simplest method without any fancy ICT stuff is the need for them to want to balance the range out, which they did here at the purple level, or this low, needing to print an up candle there, Then they take the low of that up candle, and then the rest is history there. You see that?
Yeah, it's not looking good, is it?
Yeah, so let's see. Let's see what BTC does. Take today's high by tomorrow,
Well,
and then we'll look for further retracement. Failing which,
tomorrow are announcements.
is it? What announcement?
GDP is tomorrow. Or am I wrong?
I don't think tomorrow is anything. I could be mistaken. I'll have to double check that.
Uh-huh. That's me. Tuesday.
Yeah, I haven't seen. I think I briefly looked at it. Could be. I think tomorrow's a quiet day.
Consumer confidence.
Yeah, I think tomorrow's a quiet day.
Yeah.
Can you
Okay.
please show me what makes CSD
Thursday.
invalid?
Thursday
Yeah.
is GDP.
What makes CSD invalid? Well, CSD, I won't say what makes it invalid. What invalidates it is at this point here, for example, on the M5. Right? Where were the highs here? There. Let's go M15. Let's even look at this little range here, right? The need to want to balance the range out here or here, right? The candle that balances the range, this guy, the low of that candle there gets traded through and then starts to break down. Now, what would make CSD invalid? Obviously, if you're looking at the candle, the CSD candle itself, and it's done the job here, but then for some reason we get that. That would invalidate your setup. So I don't think that there's such a thing as what would make CSD invalid. It's more so what would validate CSD than make it invalid. Right. What else, guys, before we move on? Let's look at DXY. 2 weeks ago, we said, again, the need to want to print a down candle completely through the red zone we had marked off. Now we had a little bit of, we had wicks through here, because you can see here, right here, anything below this is all running on buy side because we had a weird gap down that opened up lower and then started to shoot up. So there's an absence of sell side delivery here. Now price came down right up to this point, which still makes this zone, let's refine the zone now since we can. Anything from here to here, we need a down candle inside there. That's where we need a down candle to print, whether it shoots straight through or not. Now this sort of lines up when we start to look at NAS, right? And what I want to actually see NAS do, again, if you look at the structure of NAS, lower high, lower low, lower high, lower low, lower high, lower low, right? And my target, and some of the guys would know that I've been chatting to, was here. Why here? We look at M15, even H1. It's the need to want to come and print a down candle close there. That's all that it is. Has it done that? No, it hasn't. There's even one a bit lower down here on the M15. So what I'd actually like to see, since we are still in a bearish dealing range here, we took buy side, we took some sell side here. I'm looking at them wanting to make the range efficient right here. It's above the 50%. Let them come in and print an up candle, 15-minute up candle here. Then let them take that candle, retracement, we'll look at taking it all the way down here. Then we're starting to see the model that we like, right? And we want to take it, all of this is liquidity now. You agree? They've built up all of this internal range liquidity, and likelihood is that they take it, come up here, make this range efficient here, and then we roll over. If they are doing this on NAS, then they are most likely going to be doing this on DXY, right? From here to here is that pump up on NAS. Then we most likely look at some strength coming in there, right? Because once they make the range efficient, if they do it here, print a down candle here, right? Take the high of the down candle. Retracements would be for longing for that. Let's have a look.
So couple of areas of interest I have for DXY and NAS. So
Yeah.
DXY, if you look at, kind of zoom out to the weekly, there's sort of an order block, right, at like 99, 97 to 99.
Yeah, a lot of guys targeting somewhere there. Yeah.
Yeah, and then the entire move up, if you take this entire leg up, the golden pocket actually is at 97 to 98 as well.
Yeah.
I'm wondering
So-
about that, but honestly, the NAS doesn't seem to really be following or inversely related to DXY right now, and I wonder if once the market starts kind of thinking about the recession,
Yeah.
this DXY and NAS relationship is going to basically reverse. So the dollar will go down and indices will go down with it.
Yeah. So the idea behind non-correlation would be manipulation, right? So if DXY is going down, but NAS is also going down, that means price is being manipulated. DXY could be in one big flat type correction. We don't know. It could do this for all we know.
Yeah.
Or,
And on NAS, I've still been looking at that 12.3,
yep.
12.330. There's an order block there, right, with the big ass FEG.
So if we're looking
on
at
the 400.
these, yeah, if we're looking at these, let's look at these now, right? All of these levels here, and I don't know why my phone or whatever it does keeps deleting all my levels, but the need to print there and the need to print here, right? 12.3, that's your 12.3 there. Yeah, it's high. Obviously, we were always looking for lower. If we look at on a monthly level here, that's your inducement level. And there's something that I needed to show you from the other day, but now all my levels seem to be bust. I'm gonna have to find out.
Yeah, we've got that. Yeah, we've got that level at 13.4, and then there's that inefficiency, and then I think we had always thought that 13.7 was going to eventually be taken. So if
Yeah.
we come down to 12.3 first, I'll look to long. If we go up to 13.4, 13.7, I'll be looking to short.
Yeah.
But those are kind of high time frame kind of swing levels to keep an eye on. So
I had something here and I just wanted to figure out what it was. I just can't figure it out right now. but it had something to do with 13.7. I'll figure it out. Again, if you had a range low here, this monthly candle closed below this. The very next candle is where your blue level comes in. What do? They take the blue level and they fall. This is the candle, which is March, which closed above this range here. This month's candle, April, the low of this candle comes in at 12,817.20, right? Let's have a look at what that is actually. 12,817.20. So all of April, it's actually the low here that I'm targeting around the 12,835, right? Now, we're almost at the end of March, the beginning of the new month. If they take the low of that candle, then I think it's cooked, and they're gonna want to come much lower down. Right now, this candle will act as liquidity on next month's candle. So when next month's candle opens up, it's going to want to take the low of this month's candle and then do that if it wants to, right? So even if you treat the monthly as if it were a daily or otherwise, they still do the same job. Today in particular, what did I do today on NAS was simple, right? Let's look at it on M5. We had, am I on Chicago? Right. Okay, let's not worry about that now, right? None of our concern. We had the overnight session and the high was taken here. I'm watching this high here. The candle that took the high is this guy. The low of that candle is here. As soon as it gets traded through, what am I doing? Change in the state of delivery. I'm going short. Where was I targeting in particular? Blue level. Once it reached the blue level and the down candle highs are being traded through on the lower time frame, I'm out. I'm actually out of the short right now. I'm looking to short again to go lower tomorrow. There was something else in here. Let's have a look at this, right? And if you want, you can go and watch the currency merchant. He may have posted a small little video today. I'm not too sure if it's in on YouTube. There's the high.
Yes, I saw it.
Yeah, there's the high being taken here, right? There's the order block here. And all he did was 50% of that order block, or the candle that took the high, bodies, right? There. And that's where he went short. So if you put that into perspective, and we come, let's say here, and there was something I needed to look at. I was going to... There's something that I needed to show you guys. Where was it? Let me have a look here.
You mean the midnight session?
No, not midnight session. I just can't find it now because it was the same theory. and I wanted to show it to you. Right? All it is, let's look at it here. Here's your high. This is the candle that took it and closed above. That becomes the candle of interest. And all he did, body to body, took 50% of that candle. We're not interested in other candles here. We're not interested in all this. Unless it consolidated here and then pushed up higher again and broke another high and then got CSD, then I'm interested in a candle that formed here. If it didn't do any of that and it just produced up candles like this, as long as it's producing up candles, I'm not interested. I'm only interested in this candle because this was the candle that took the high here, right? So all he did was this candle, 50% of it got traded through here. When price came back in here, I think he went short here, M1, let's have a look. And he mentions it, he looks at CSD on the M1. CSD on the M1 is down candle lows being traded through. There. That's it. And he targeted, I think, somewhere here. Somewhere here. Right? And then he went long here. Watch that video on his YouTube. He was targeting 935, if I'm not mistaken. If you think about it, and over the last few weeks and from where we've gotten from, you don't actually need, I mean, it's good to know the ICT stuff, but all you really need to know is what the draw on liquidity is and what the draw on liquidity is and how to determine CSD. I mean, the FIB projections help. If I FIB this candle body to body of these order blocks, projected it down. Let's see if this is right. There. 2 standard deviations and I'm out. There. So we have all the tools that we need. It's just a matter of using them. What else do you guys want to look at? I think I've got a few more minutes left.
Nat gas 4 hour.
Let's have a look.
Would you look at this as a bullish dealing range? We actually had like a triple bottom
always,
and then
yeah, that's always the case, huh? It makes a dealing range, and do we look at that 4 hour? Let's go.
yeah, and I don't think, I mean, we've talked about this, the lows aren't in, right? But just
Yeah.
I still think the possibility of making like a $3.50 to $4 high is doable.
You know what the good thing about this becomes, when you get double bottoms or triple bottoms like this, let's just call it double bottom, right? What ICT says is, if you think that when price comes for these relative equal lows here, and if you think that it's merely just going to do that and move away, then you're almost sadly mistaken, because the algorithm, its point of reference is the range created from here to say up here, and what it will reference is a move down here like that. So the algo will go for that. Let's get rid of that. Somewhere there, right? That's what the algo is going to go for on 175 when it gets through this. Right, we leave this on, let's see what it does when it does eventually come through that. The range from here to here, projected down here. would I call this a bullish dealing range, right? So remember, take away ICT stuff, right? Let's talk about ranges. The failure on this H4 to close below this range here, on this candle that swept the low, then gave you CSD here. What happens? Where does it target? The start of the delivery or the opposite end of the range, right? Start of the delivery, this delivery started here, right? But if we had to look at the entire start of the delivery, I think it was here. So double top there again. Is this a bullish dealing range in the technical terms or sense? Yes, it is. It is a bullish dealing range. Would I long this right now? No, I wouldn't. Because
Yeah,
I'm
no, I'm
starting to see
hoping
this,
to
right?
looking for more of that, yeah, gap fill, and then
Yeah. Because what we
because
see
we never
is,
even reached the 50% that pullback that we
yeah,
got.
no. So what is this setting up? This
That
is setting up
stop
failure swing here.
shy.
Yeah, so this is setting up failure swing for that.
Right. Yeah, I agree.
There, if it is more bullish. So not interested here. And again, on a 4 hour, if you look
I
at
want one more. Yeah, like one more.
let's look on, and I hate going on H1 on this stuff because I can tell you it's a bearish dealing range if you ask me. It's a bearish dealing range here and here. So if you're thinking about it in terms of bearish dealing ranges, they may want to come all the way back up here. Here. Print candles there. Tap the order block and then roll over. With nat gas, it's almost there's not much. There's too many gaps in the structure to play it well. I mean, it's stuff like this that you have to do. Failure to close below here, then CSD, you just go long. Go long, target some highs. Get CSD again, you bearish, okay, let's target some lows. I think we need to, you know what the thing is? I think we need to look at the futures chart of nat gas. And it was Henry something. Henry Hub. That was it.
Henry Hub, yeah.
Need to look at Henry Hub. Henry Hub's a bit cleaner, right? So again, if you look at Henry Hub, there's your volume imbalance there. Dipped into it, but what needs to happen in there? You need down candle bodies in there. You need candle bodies in there, not necessarily down candle bodies. Take away everything on the delivery, and then there's a need to come back here. Order block. So
And that's, yeah, I'd like, yeah, if this does end up being bullish, I'd like for it to be like a three-legged move down, right?
yeah,
Come back to that order block. There's also that FEG right above it.
yeah, yeah,
And then look for some structure down there to
yeah. And I think
go along higher up.
just switch to Henry Hub. Should give you an idea, because this is a lot better than that other shit we were looking at.
Gotcha.
But again, look at these relative equal lows will never stay in the market. At some point they're going to be taken. Yeah, we still want lower. We still need lower. They still need to print candles down here. The lowest volume imbalance I can see down here is, I think we had it marked as well, was here, right? There.
Yeah, around 180, right?
Yeah.
Yeah, that looks
puts,
right.
Yeah, which I think it puts us in the same. I think we did this from about here to here, projected down on a high time frame. It was sort of this leg here, projected down there, right? See that? That's what the algo would reference. It's not just going to come below this low here, create it here, and then turn around. No, it's going to go lower. Yeah. Any other questions, guys? Let's have a look. Nothing here. Did I do NAS? You missed NAS. You missed NAS, but this is going to be posted. The whole idea is CSD and range efficiency. Because like I said, the idea of speed comes from efficiency. If the need here was to print an up candle and they've done the job and then the low of the candle gets taken, that's where speed comes from. So CSD plus range efficiency. That's all you need. Right, let's take a small look at BTC again. Not doing much. We're looking at it on this chart. That FEG is still holding up. So we'll see how this plays out, and we will update. Well, I'll update tomorrow. Not looking at anything bullish at the moment. Until maybe tomorrow. We'll see. That's it. Upload this
Thank
to
you.
YouTube. Shut this down. Right, let me end the recording, then I can upload to YouTube. Thanks, guys.